Hello, everybody. Welcome back to another market close. It is Friday, May 24th, 3:45 p.m. We got a green day, folks. We got a green day. I did not know if today would be a green day. I think a lot of people were a bit skeptical if the markets would turn green by the end of today, given we're heading into a long weekend and Fridays typically we get a sell-off. But it seems like we got the sell-off yesterday. S&P fell from 533 to 525. Pretty much every stock fell except Nvidia. And every time we get a sell-off, the market's like, nope, we want to get back in. We want a piece of this action. And as a result of that, we get a green day today. So we got a lot to talk about, a lot to get into. If we just take a look, thank you everybody for being here at the equity markets. S&P up 0.6% on the day. So you got 529, Nvidia 1,059. I think it topped out at 1,063, up another 2% on the day. $2.6 trillion market cap. Robinhood, $20.41. Amazing day for Robinhood, up 6% on the day. We saw it go as low as like 1907 in the morning. And from there, people said, no, we want these shares. And they bought them up 6% on the day. Palantir, $20.98. Palantir at like 2107 or 2110 for a little bit, then fell right below 21, but still up 1.23% on the day. You got ELF up another 4% on the day. HIMS up 6% on the day. Alibaba at 81.45. SoFi, it's up 2%, still under $7, but it is up 2%. PayPal flat on the day. Intuit down 8% on the day after they had their earnings. And then Bitcoin got a nice little rally up 2%, trying to get to that $69,000 range again. Again, the Ethereum news was very excited for Bitcoin. Ethereum basically flat on the day at 3,700. But the idea that Ethereum was going to be included or that spot ETFs were going to be created for Ethereum and be served to the public, definitely good news for the broader crypto asset class. And that's why we have Ethereum and Bitcoin doing well. So overall, man, it's been a green day. It's been a pretty green day, and it's not been too bad. So it's nice to see what's happening in the markets. I'm Beneficial. I'm not going to be able to stay for the close. Got a call for a very important business deal. See you guys Monday and or Tuesday. I'm Beneficial. Good luck on the deal. Always be closing. Hope you have a good business deal. Dude, the rush you get before closing a deal, I'm sure plenty of you in the chat have had that experience at some point, whether it's a negotiation, a deal, you have your own company, you're closing a consulting contract. It's the best rush in the world. It's the best rush in the world, dude. It's like, it is the coolest thing ever to close somebody on a deal, because what you're doing there is you're getting your idea, your opinion about a service, a product, something that's, selfishly beneficial to you, and you're convincing someone else to give you the chance to let you do it. I think in the past month, I've had two of those. Number one was I closed the debate contract for a kid I was coaching for like $6,000. And that was awesome because I got on the phone with his parents and just like, boom, butter, smooth, closed it. It was good. And then second was trying to get the Vlad interview in February because they reached out to me, but I pitched them like a Lex Friedman type of podcast, not just like a 10-minute segment. And it took them 2 weeks to respond. But once they finally responded, they're like, all right, we're down. I'm like, yes, we got it. And I wrote this like long email. I was like, hey, I think it'll work for all these different reasons. It's always fun to close a deal. So shout out to you on Beneficial. Have a good one. Let's get into Ryan Detrick. So this is the guy who I showed you guys his charts a couple days ago, who does a lot of good research on if the S&P trends in a certain direction, what is the historical likelihood for the markets to continue going higher. He's the person who showed the chart about the S&P on the 100th day of the year. If it's up 10% or more, we end the year up another 8% on average. Here's his take on where the markets are going and what we likely will see for the back half of the year.
Joining me now, Carson Group Chief Market Strategist Ryan Detrick. Good to see you again. Why do you think so?
Yeah, thanks for having me, and happy Memorial Day to everybody out there. And 13 years ago, we lost Mark Haynes, so let's remember him, right? But listen, I came on to you a few weeks ago, Scott, and we said, don't sell in May, go away, right? Usually May does pretty good, especially in an election year. And sure enough, that's happening. So we've been on record. We think we could have a surprise, we'll call it, surprise summer rally. And you look at June and August, usually not that great of months. On average, those months are up 1.3% for the S&P 500, Scott, much better than expected. So we can get into some of the other weeds of this, but the bottom line is we had that washout that we saw back in April. And we think, again, kind of like Professor Siegel, I'm not one to go against Professor Siegel. We think the upward bias is still alive and well.
Let me ask you a question. This week we got scared for a minute. The minutes of the Fed were hawkish, right? Even though they were backward looking, it still had an impact on the market. What happens if at the Fed meeting, if you're looking for a summer rally, what happens if at the Fed meeting, which is not backward looking, okay, right, in a couple of weeks, what if Chair Powell is more hawkish than maybe we really expect him to be. Does that upset what you say?
I think it would, Scott. I mean, I think it would. I mean, we think we're seeing some better news on inflation with CPI. We all talked about this a lot. It's all about shelter. We've seen rent prices starting to go lower, so that should lead to OER. Those are some positive signs. If they come out hawkish, yeah, that could upset it. But let's be honest. We hear all these different Fed speakers. We still know what Chairman Powell's been saying. He wants to see the data. I know we've got PCE coming out soon, so we'll cross that bridge when we get there. But I do think we don't expect that. I guess is what I'm going to say here.
Okay. What gets us, or what powers us towards this summer rally that you suggest is likely?
Yeah, well, it's probably some of that conversation we just had. Some better inflation data, obviously. We just look at the last 2 days. I mean, some of the economic data that we've seen, this economy is not slowing down. That Atlanta Fed GDP now over 3%. I mean, these are strong. But here's what to think about. Yesterday was the 100th trading day of the year. After 100 days, this is the best start to an election year ever. Now, what in the world does that mean? Scott, I found 20 times the first 100 days were up at least 10%, double digits. The rest of the year has been higher 85% of the time, with a median rest of the year return of another 10%. What I'm getting at, strength usually begets strength. With some better inflation data, with the economy still strong, those are all reasons we've been overweight equities for a long time, and we're still in that camp.
Okay, so if strength begets strength, does that mean that internally I want to continue to lean into the mega cap tech stocks?
We don't think so. I mean, we're more neutral mega cap here when you look at mega cap tech. When you look at it, I mean,
Why?
I look at well because we look at valuations, right? We look at valuations and look at a 20-year valuation, 2 standard deviations above their long-term trend. So again, that's pretty pricey. And again, under the surface, I mean, just for year to date, 10 out of 11 sectors are higher. Real estate, yeah, it's lagging. But we are seeing more broadening out this year. And to us, we've been adding on any weakness, industrials and financials. I know the discussion before I come on, great panel discussion there. They kind of talked about that, and I agree. I mean, those cyclical areas to us still look good, especially if you get a rate cut or two. We think that can help kind of juice the economy just that little bit more. And we like those cyclical areas, specifically industrials, financials, the rest of this year.
And so I think his basic argument here is that a rate cut does juice up the economy, and it looks more likely than not that we are going to see some type of a rate cut. Here is the expectations from all of the big banks on Wall Street and their expectations for a rate cut. So this is as of today. As you can see right here, Bank of America, Barclays, Deutsche Bank, all these guys, most of them say September to December. So the only ones that have July are Citigroup, JP Morgan, MUFG, I don't know what that is, and that's it. So those 3. Then 2025 is Jefferies, LH Meyer, Mizuho, and then Societe Generale. Everyone else says either September or December. So I mean, we're gonna see, but pretty much a majority of the banks here are saying, hey, we think it's gonna happen this year, and maybe it's in the back half of the year, but it is gonna happen this year as well. So we're gonna see how that plays out. But if it does happen, it's going to be a bit more exciting. Now, speaking of Palantir, I see a lot of comments about Palantir in the chat. One thing to remember, again, for Palantir is that it is up year to date, right? This is something I keep trying to remind people because sometimes we forget. Palantir at $21. It's up 30% year to date, dude. The S&P usually does 10%, doing 30%. You're beating the S&P. The problem is with Palantir, we got it so early. And when you look at comparables like Nvidia, that's up 115% year to date, you kind of feel like you missed out. I get it. I understand. I think the one thing to remember here is that Palantir at a $46 billion market cap, growing 21% year over year. I think it is fairly priced. And I think as the growth continues to come, it's not going to be stuck at $21. There's going to be a lot more momentum along with rate cuts helping juice up the environment. And also along with Palantir fitting into the AI trend and AI ecosystem very clearly. The problem is it gained a lot of momentum, right? It did what it had to do this year as it went up from $16. And remember, we were stuck in the purgatory of $16 for at least 8 months. We had that big breakout to $26.44. I think we even hit $27.50 on one day. And then we fell all the way back down to 20. The thing that I love about this is we have not cracked below 20. And I saw a comment in the chat that I agree with. 2041 was the bottom here. Wall Street might be trying to get this sucker to $19 for them to really load up, right? They might want to get it below 20. And right now, the algorithms, whatever you may be, thinking controls the market, is not really letting this bad boy get below 20. Like, people want the stock. Even today, people are juicing it up a little bit more, even though Palantir has been relatively flat since earnings. So I do think that rate cuts will help, but for Palantir, it's about really executing the rest of this year. And quite frankly, I know it's boring, but if you're a long-term investor in Palantir, you kind of want it to be boring. you kind of want time to develop for this to sink in 20 and 21 to become real strong areas of support, so that when we make the next leg up, we keep the next leg, right? It's not a momentary move just for the day because JPOW said something, but it's a legit move, and we don't have to worry about, going back to the 15s. Like, no one's concerned about Palantir going to the 15s right now, except if you're like super bearish. Pretty much everyone else says, yeah, we're past that stage. Once we get to the 25, I don't want to worry about going back to 20. I don't want to play this game again, right? I want to be done with that and then get to 30 and not have to worry about 25. And that might take a year, but I think that's okay because that gives us the time to accumulate, and it gives Palantir the ability to justify their valuation much more than they're justifying it today. So that's what we got going on in the world of Palantir. We got Alan here up 150% on Nvidia. Leaps, yeah, if you bought the $1,000 strike on Nvidia this week, I think you're up like 300%. That was expiring today. It was going for like 1,900 on Monday. Now I think it's worth well over 4,000. So option sellers or option buyers have done well on Nvidia this week, and option sellers have as well, right? If you sold some puts on Nvidia or NVDL as well. We got HIMS up 6.85%, Alibaba at 81, Pinduoduo up 2.55% as well. So a couple other things that I want to talk about after the bell. We'll talk about OpenAI and Apple. Seems like they're strengthening their partnership and they're making it much more intense. It does seem like WWDC, we're going to have a big partnership. We had Dan Ives on CNBC today talking all about what that partnership would look like and how much faith he has. It's kind of interesting the way Dan Ives is building his conviction on Apple. I mean, he's sounding like he knows something that we don't know. Like, he sounds like, no. Everyone's underestimating the upgrade cycle for China and what's going to happen in the context of Apple. His kind of core thesis is there's 270 million devices in China that haven't been upgraded. And my skepticism has been, is the AI iPhone going to be interesting enough for the skepticism, or for the Chinese citizens to upgrade that phone? And iPhone 15 obviously wasn't. iPhone 15 for me was interesting because I had an iPhone 12, but for the vast majority of people, it didn't matter. The AI version of that is going to be interesting. The other thing I'm curious about, and you can say this is a nitpicky kind of critique of Dan Ives' thesis here, but if software is the moat for Apple's newest iPhone, aka AI is the moat, and the integration of AI, I wonder if there's any argument about the CCP potentially interfering with that software. I mean, when we think of an AI personal assistant, it has all your data. And you think about, China really wanting to compete with OpenAI and, control their citizens' data. I wonder what an OpenAI OS for the iPhone would look like in China. Maybe I'm just throwing that out there, and that's not going to be a big concern, but it is one of those things that's interesting in regards to what the geopolitical implication is going to be of a AI oriented iPhone in the hands of the CCP and what they're going to do with that. Because for what I know, I don't think ChatGPT is allowed in China. I don't think any of that software is deployed in China right now. So it's going to be interesting to see what happens with that. Chinese may not have all the functions for OpenAI. That's correct. They might not have all the functions. Dan I will be on the show probably in a couple weeks. We messaged a couple of days ago. He definitely wants to come on again. It's just, dude, the guy's been busy. I mean, I think he just came back from Asia. He's been doing a lot of traveling. So we will have him on the show pretty soon, and we'll get to talk everything iPhone, Apple, Tesla, and Palantir with him. Hopefully in the next 2 weeks, I'll try to make sure we schedule and get him on, and we'll get his take about what's going on. I'm sure Apple has thought about it. I don't know if Apple's thought about it, dude. I don't think Apple's thought about anything when it comes to AI. This OpenAI partnership looks like it's rushed. At first, they were, trying to do Gemini. And they just canceled the the Titan project. I don't think Apple knows what the hell they're doing with AI, but they know they need to do something with AI to justify a 30 PE with 0% growth. And so they're going to do something. It's just a question of what's it going to end up being. 4 p.m. Friday, May 24th. Thank you, everybody, for being here. Stock market is now closed. All right, markets are closed. We got a long weekend, folks. Let me know in the chat if you're doing anything for Memorial Day weekend or doing anything for the long weekend. Here we go. Nvidia, 1,064, up 2.57% on the day, up more than 12% for the week. Absolutely incredible. Robinhood up 6.6% on the day, $20.51 on Robinhood. Not a bad performance this week for Robinhood. Ethereum 3,700, S&P 500 529, Palantir $21.02, HIMS 1687, SoFi 692 up 1.32% on the day. PayPal, Kathy Wood bought 100,000 shares of this one yesterday, 61.64 on the day. GameStop, one update on GameStop. They actually are up 3% on the day. The GameStop short float came out this morning along with Palantir. Palantir, real quick, their short flows decreased by 1%. So now Palantir's short float is 4%, 77 million shares shorted out of 2 billion shares outstanding. So it's down 1% over the past 2 weeks. And GameStop actually went up 6.24%. So the GameStop shorts have not quit on GameStop. 68 million shorts now, 25% of the float is short. And this was in the past 2 weeks when the Roaring Kitty stuff went down. So really interesting to see the GameStop shorts don't care at all. They are ready to keep shorting this bad boy. And with Roaring Kitty not tweeting anymore, I don't know if there's necessarily going to be too much momentum to go against it. But GameStop here at $19. AMC is up 6% on the day. I didn't even notice that. Faraday Future was down 2% on the day. Coinbase at 237. They were up 9% on the day. Enphase 125. Enphase had a phenomenal day, up 6.5%. Again, we saw they had that new microinverter Finland news that came out a couple days ago. Outside of that, it seems like the market's pricing in a rate cut, and they're trying to front run it by buying up stocks that are sensitive to rate cuts like Enphase. Where's Tesla? I haven't looked at Tesla all day. Tesla's up 3%. Not bad. Tesla seems to be a beneficiary as well of the market potentially thinking rate cuts are on the way. TJ and I, we did close out another set of puts. I just tweeted about it like an hour ago. We made $1,100 on TSLL, which is a leveraged fund on Tesla. We made 40% in a day, which is not bad at all, right? So we sold puts when Tesla fell down. We closed those puts as Tesla went up. As you can see, TSLL is up 6% because it's 2x of Tesla up 3%. So we're able to lock in a win on that one. Bitcoin right above 69,000 at the market close. Not bad at all. Clean Spark was up 3% of the day. Coinbase up 9%. Marathon up 5.63%. Hut 8 mining up 4.74%. And then MicroStrategy up, 9% on the day as well. That's interesting because Bitcoin didn't move that aggressively today. But the Bitcoin proxies had a hell of a day. So it seems like the market's thinking that Bitcoin's going to make them move in some time as well. Not bad. Not bad at all. FSLR, yeah, First Solar having a hell of a day as well. First Solar, up 10.78% of the day. Solar's had a good week. Sunny from the H says, I start my work with you and I end my work with you. Let's go, man. I love it, Sunny from the H. Thank you so much for being here. All right, let's listen to Dan Ives and his thesis on Apple. I thought it's an interesting one. Let's see what he has to say, but he thinks everyone is underestimating Cook and Cupertino.
See, we're at 189 on the stock right now. Where is $1.3 trillion in market cap going to come from to get us to 275?
I think this is going to be an unprecedented upgrade cycle that we see not just over the next 12 months, but next 18 months. I mean, look, our Taiwan checks now are showing not just stabilization, but what I'd say a slight uptick. That's important because China, which has been the headwind, now starts to become a tailwind. I think June's going to be the last negative quarter for China. And you look at this, I think it's a get out the popcorn moment because you have 270 million iPhones that haven't been upgraded in 4+ years. And now AI coming to Cupertino. I think we sit here a year from now, and this will be an unprecedented renaissance of growth that we see from Cook and Cupertino.
Haven't you thought, though, there was going to be kind of a super cycle in the last couple of iPhone models?
Yeah, so I'd say this last one, because of China, has obviously been disappointing. But what ultimately becomes a headwind is a tailwind. That's when you have the best installed base in the world, 2.2 billion iOS devices, plus now at WWDC, I think it's the most important Apple event in a decade because this is going to be the foundation for developers building AI. Most consumers, they're going to access AI through an Apple device.
What makes the China headwinds that we've seen ultimately turn into a tailwind? I mean, nothing in the data surrounding the economy would suggest that. Is it the technology itself relative to competitors in the region? Or, what are your channel checks telling you specifically about China and why that will ultimately become a driver once again?
Yeah, it's a great question. And I think it speaks to that March quarter. Remember, New York City cab driver was bearish on Apple, obviously better than expected. I think what we're seeing now is there's 225 million iPhones in China. 70% of those have not upgraded in 3 years. So you're starting to see a tick up, and the vast majority of those are going to be on Pro. And that's important because that's an ASP lift. And I think, look, are there definitely geopolitical issues that you're seeing? No doubt. but I think some of that started to calm down. And this goes into what I believe is going to just be a massive AI-driven super cycle that starts with the iPhone 16. But services is key. And Mike, like we do about valuation, I think services is the key. That's where a lot of the bears, what they've missed in Apple, is that services valuation.
It's been an interesting week in autonomy, given the blessing that Jensen Huang gave autos in the call for Nvidia. You think it was a mistake to cut the cord on Project Titan? Will they regret that later?
I think that's probably the best move they ever made, because ultimately Titan was never going to work. That was going to be an Everest-like uphill climb without oxygen. And I think when you look at for Apple, it comes down to AI. This will be a historical moment, and I think a historical period for Cook and for Apple. And of course, right now, if you look, AI being led by the godfather of AI, Jensen, look at what Nadella is doing in Redmond, of course, Google. But now this is the drum roll for WWDC, where for most consumers, they will access AI through an Apple device.
What is it that AI could do for those consumers who haven't upgraded?
Now, again, I think that's a good point. I mean, the 2 billion devices that exist, they're only going to get AI via their iPhone or their computer. Most of it is going to be some type of, interactive voice experience with the touchscreen. So he's right that it's going to be Apple. The question is, what are those services going to look like?
Their iPhone, that they say, okay, now that is technology that makes me want to buy a new iPhone. What is it that AI would do to kind of incentivize that behavior?
Yeah, I think the key focus points are going to be developers are going to build AI, generative AI apps on Apple's ecosystem. And a lot of these, the functionality from an LLM perspective, the Openai partnership, they will essentially work on iPhone 16 and further, and what will happen with iPhone 17. The other thing is that a lot of the actual features that come through, you will not be able to do on a pre-iPhone 16. So this is going to be just a main event, because it starts what's really going to be on the services side. And a lot of those apps, as you buy them, who's getting the revenue? I mean, Apple's getting the
So what you're essentially saying is that Apple is the conduit for a lot of other people's AI innovation, and that's how consumers are going to tap into it. It's not that Apple itself is, going to come out
But
and
they'll
say,
take
we
their
got
bite.
the special sauce.
They'll take their bite. And of course, being led by godfather of AI, Jensen. But even though Apple's late to the game, when you have 2.2 billion iOS devices, the ability now from an install base and the services side, that's why this is an event when they unveil. I don't view that this is when you come back from Apple Park June 10th being disappointed. I think it starts, it's going to be a historical move for the stock.
You'd rather have Cook's hand right now than Nadella's?
Look, Nadella right now in the Mount Rushmore of AI, there's the godfather of AI, Jensen and Nadella. But I do believe when you look at Microsoft, the path on that stock, there's no speed bumps that I see. I mean, I think probably the first one to hit 4 trillion will be Microsoft. Because of AI, because of what we see on the enterprise side.
Fewer geopolitical supply.
Fewer geopolitical, antitrust is not an issue. That's why right now at the top of that mountain is Nadella. But when you look at Cook and Cupertino, this is going to be the start of a renaissance of growth. And I think we're going to look back. This is Meta 18 months ago. The point is, like, sentiment's awful from an institutional perspective, retail skeptical, but this will be another flex of muscles moment for Apple, I believe, over the next 12 to 18 months.
Now, if I could offer some skepticism here, little bit of skepticism. It's always healthy to have some skepticism. I want to go through a couple points where Dan Ives might be wrong on. First of all, real quick, Vlad just tweeted, the SEC has once again approved another class of crypto ETFs, and we're ready. Once trading begins, Robinhood will support ETH ETFs and brokerage and retirement accounts. It's important for us to give customers access to invest in crypto how they want. He's basically saying, you mother effers can't sue us with this stupid Wells notice if you're going to literally approve a quote-unquote unregistered security. I mean, maybe they can still find a way to sue Robinhood, but could you imagine trying to sue Robinhood and then Robinhood's like, but you approve this as a literal ETF? Like, there's just, it's going to be hard to imagine that. So looks like Robinhood's ready to get on track with ETH ETFs. Okay, so let's give a little bear case to what Dan Ives is saying on Apple. I think there's a couple central arguments. Number one, in order for services to add the, call it $400 or $500 billion of the 1.6, 1.5 trillion that Dan Ives is talking about, there have to be phenomenal AI applications that drive the industry, meaning consumers, to download those applications, and then Apple takes a cut of the pie. I am skeptical, personally, what those AI apps are going to look like. And I want anyone in the chat who thinks there's a amazing AI app that's going to be the next TikTok or Instagram or Facebook of AI version of our lives, which is going to, a couple things, encapsulate our attention, allow us to pay for it, right? We're actually going to have like either through time or through money, and be make us so much more productive, offer a product or service, like the DoorDashes of the world, something that's going to enhance our lives for the better. I really don't know what those stocks look like, or what those apps would look like. You guys are saying GameStop's going up? What's going on with GameStop? GameStop's up 10%. Okay. Don't know why it's up. I don't know why GameStop's up, but it's up right now. Interesting. Andrew, I'm going through my bear case on Apple, and then GameStop decides to go up. Did any news come out? Hold on. Let me look at Twitter real quick. But that's the first bear case. The first bear case is what are the AI apps going to be that create all the monetization that Apple's going to be able to add into their services? Let me quickly search GameStop, see if anything came out. Any news? GameStop intends to use the net proceeds from the At the Money program for general corporate purposes, which may include acquisitions. Did they buy something? Oh, they sold 45 million shares. Okay, so GameStop just raised $1 billion. Why is the stock going up? They just diluted people by 45 million. Wait, what? What the fuck is? They just dumped 45 million shares. If I'm not getting this wrong, they just dumped 45 million shares in the market, and it's up 12% because they raised $1 billion. Huh? Dude, the apes are buying it because they just got diluted. That's definitely a way. Dude, I would love if a company could dilute me if I'm owning stock in it and it actually goes up versus down. Usually goes the other way. Yeah, usually goes the other way. It is bullish, I guess, if they do something with the billion, but they did dump 45 million shares. That's like 10% of the float, if I'm not wrong. Like 8% of the float. Interesting. It's not dilution for debt, it's cash on hand. That's correct. So the dilution leads them to, AMC's was for more about debt. They get to actually keep the cash. So I guess their balance sheet went up by $1 billion, which is why it's up 11%. You could argue that. But it's a question of what they end up doing with that money. So yeah, they got the money. Question is what they do with that money. Okay, so that's the first bear case on Apple, right? Are the AI services going to be there? The second bear case to me is that people just don't upgrade. So Apple WWDC, which is going to be in like a month now, like I think 2.5 weeks, it's going to be live. I think June 10th. So they're going to put on this event. They're going to say, hey, we're partnering with Openai and the OS of the iPhone, which if this Openai rumor came out like 3 weeks ago, that means they've had to design this OS, if I'm not wrong, in the past month, unless they've been working on this for a year now, and then the rumor just came out 3 weeks ago, which is possible. But the fact that they were shuffling between Gemini and GPT kind of makes me believe that they're going to show us an elementary version of what that OS looks like. It's not going to be built out, but the idea for it is going to be built out. And then over the summer, they're going to really code it out and then launch it live in September. If that's the case, it's got to be so amazing, so interesting, so exciting, so incredible that I actually want to let go of my current iPhone. And I just don't know if that's the case. I just don't know if that's the case. GameStop now up 12%. AMC is up 4% as well. So from those perspectives, if we don't see a lot of momentum from what the AI partnership looks like, I don't know if Dan Ives is right about this, dude. You got to remember, I love Dan Ives. He's very convincing. He's smart. He's been right about a lot of things. He's been wrong on Tesla for the past 2 years, right? I mean, it is what it is. So you can't just take him at his word. I'm skeptical on the upgrade cycle. I am skeptical on AI services being something people actually care about in terms of modern applications that are using AI. One of the other things, I don't know if you guys saw CoffeeZilla, he just put out a 30-minute documentary on the rabbit. I at least have been saying I don't think AI wearables make any sense. I've been saying Vision Pro I think is stupid. The rabbit is stupid. The Humane AI pin, we laughed at it a couple weeks ago on the Market Open. We were looking at the marketing videos. It's all stupid to me. All of it is dumb. And the iPhone does everything that it needs to do. Apparently that's a major scam. Like the founder launched an NFT project. The NFT project failed. I encourage people to watch it. It's a very good investigative piece. And they turned it into this rabbit, hardware device. And now that's what they're selling. So I think a lot of the AI wearable markets have been bad. That's another bear case, the Vision Pro. What if they announce in the next 3 quarters, hey, we're discontinuing the Vision Pro? I mean, maybe it's bullish for investors because they're not spending money on it, but it's also one of those things. It's like, okay, if this AI iPhone doesn't work, where's the growth coming from? Because it's not coming from Vision Pro. It's not coming from an EV. It's not coming from the Mac. It's not coming from the iPad. Dude, it's not even charged. I don't even use this thing, dude. I force myself to use this stupid thing. I don't even use it. It's like another screen. And the battery is horrible. You put it on for like 10 minutes to see some YouTube comments on the side and it dies. Like, it's just, I don't know. It's got to be this AI iPhone, and I'm a bit skeptical on what that AI iPhone will ultimately become. Let's get an update on that Apple AI OpenAI partnership and see if there's anything new there as well.
It has been a rough week for both OpenAI and Google, with drama surrounding OpenAI and Google's shaky rollout of AI search. What does that mean for Apple, though, which is now reportedly in talks with both for an AI partner? Our Steve Kovac trying to dissect some of that today in today's Tech Check. Morning, Steve.
Hey there, Carl. Yeah, let's just call it a tumultuous couple of weeks over there at OpenAI, which, not unusual for a buzzy Silicon Valley startup to go through some growing pains and a share of controversies, of course. But with OpenAI, it's quite different. Its technology is the AI foundation for Microsoft, including the latest AI features coming to a fresh crop of AI computers that were announced just this week. Plus, Apple is reportedly going to use OpenAI technology for new AI features on the iPhone and other devices. Such deep integration with the two largest companies in the world means OpenAI's problems and controversies, from safety issues to what data OpenAI uses, fall on Microsoft and Apple as well, at least until they can make something just as good as what OpenAI has on their own. Now, to recap what's been going on, there's the departure of high-profile co-founders and executives who were concerned the startup was not taking safety seriously enough. OpenAI also disbanded a specialized safety team after that departure. And then, of course, there's that Scarlett Johansson debacle playing out this week, and questions whether the company and CEO Sam Altman were fully honest about what happened in that situation. On Monday, I asked Microsoft's Yusuf Mehdi if he was still confident in using OpenAI tech safely given the latest issues at the startup.
We have great confidence in Sam Altman and the team there. They have great work. I mean, that's the whole focus of OpenAI, is to really build a great future of AI for the world. We work with them quite a bit, and we also add our own extra efforts that we put on top of that. So we have great confidence in their work and the work that we put in our products.
Now let's spin that forward and think about Apple, which is, more vocal about safety in their products than basically any other tech company, and critical about rivals like Meta and Google for playing it fast and loose with privacy issues. Not to mention how concerned overall Apple is about its look and reputation. We saw that with the iPad ad a couple weeks ago. OpenAI deal would be a risk for Apple if it does go through as reported, and will likely need to ensure it has its own safety efforts layered on top to ease any safety concerns. And the drama's probably not over with OpenAI, but we're going to get a better look at that partnership on June 10th at WWDC, guys.
Steve, I wonder.
While I'm watching this video, I just come across a tweet. Someone says, I literally can't pay someone to take this Apple Vision Pro off me. Look at this. He's trying to sell it for $2,400, which is a meaningful discount from $3,500. He's not able to sell it because no one's willing to buy it. That's crazy, dude. That's crazy. So, I mean, it goes to show. And then that's the other risk I forgot to mention. I'll call Kris in a second and get his thoughts. If Apple does partner with OpenAI, dude, you're partnering with Sam Altman. And if you're partnering with Sam Altman, do you really trust Sam Altman? I like Sam Altman. I think he's a visionary, all that stuff. But there's been turbulence in OpenAI. A bunch of head engineers just left because they feel it's not really safe. Now you give OpenAI 2 billion devices with their operating system embedded to 2 billion people, theoretically, or at least, 500 million with the upgrade cycle. I mean, I don't know. Do you really trust them? Let's call Kris and get his thoughts on Apple and the markets. And then we'll keep going for that. I tried to get Steve today. I don't think Steve can make it today. I'll text him again to see if he can make it, but Steve's a little busy today as well. Kris, what's up? How are you?
Good. Your Apple comments really irked me, dude. Like,
okay, tell me why I'm wrong.
For someone who's like a visionary, I think you're completely disconnected from the total potential that.
Wait,
Apple
are you calling me a
has when it
visionary?
comes
That's
to
so nice. Are you calling me a visionary? That's so sweet.
I mean, you're young enough and you're stupid enough to believe in magical things like Palantir. So
no. I'm getting smart enough to call bullshit on this whole AI upgrade super cycle. You know what I mean? There's a little.
In this case, I think you're wrong. On a lot of other things, you're calling it right, but on this one, I mean, listen, I'm no fan of Dan Ives. Okay, I think the guy is very.
Hey, don't talk shit about Dan Ives on my channel. We need to keep the relationship good. Don't talk shit.
That's fine. I'm not going to insult the guy. I'm just saying he in terms of analysis, he's very hyperbolic. in my opinion, where he goes a little bit too much to the extreme when his assessments come for new technologies. But that's also his brand, right? Where he sees massive amounts of potential where other people don't see it. And sometimes he's right, and sometimes I don't think he's that connected. So, but I do think, however, that he is absolutely correct when it comes to Apple and the super cycle that we're likely to see once a lot of these new AI features start getting integrated into the iPhone. Now, the thing is, we don't know exactly what that killer application is, right? But that's exactly what the phone ecosystem was like in 2008. If you were going to tell me that, I mean, if you really take one step back and you realize how many ideas, if they were pitched to you right up front, you would have laughed at them from the get-go because they were stupid, like they sounded really stupid, and now we just kind of accept them as the norm. And it's going to be the same thing that happens with a lot of app development that utilizes AI. So anything that I say right now, like, oh, this could be a potential use case, it's going to be a meaningless thing. The key is Apple is going to be enabling all these developers to experiment and create things. So just like the first version of the iPhone, when it came out, people were like, oh, that's nice. It's kind of a cool thing. But once you started to layer on all these additional applications, you give these developers the tools and the freedom to just go wild, they create some miraculous technology. And I think that's exactly what's going to happen with this new Apple iPhone, in which case maybe the first couple of years, you're not going to see the greatest amount of growth. But dude, in like year 3, 4, 5, when like these massive like compounding applications come on that everyone wants, like the Instagram of the 19, think about Instagram.
Well, hold on.
Right?
So I agree with you. And that's why I'm not, I think Apple's probably going to go up from here. I mean, you can't bet against Apple. So let me make it very clear to everybody. There's no way in hell I'm betting against Apple. My question is, he wants to add basically 1.5 trillion to the market cap. You're telling me to believe there's going to be an Instagram, AI Instagram eventually that's going to get people hooked. And your justification as well, if, in 2008, you have to be a visionary to see this. I'm just trying to say the Vision Pro was supposed to be visionary, and now no one gives a shit about it. What if the AI devices of the future in terms of the software applications are not that important? I mean, one example to let me make it tangible. Remember when OpenAI launched their GPT store? Anyone can make a custom LLM. No one's using that shit. No one's, making custom LLMs. Everyone's doing something through ChatGPT because ChatGPT just got that good. So where do you think this software is actually coming from, and how big of an impact can it actually have?
Well, that's the thing. I mean, whenever it comes to new technology, you're going to have a tremendous amount of failures. But the point is, that doesn't mean that you stop innovating on the platform that's going to enable everything. So think about all the applications that failed when the first iPhone came out. I mean, they don't exist anymore. But the ones that did ended up becoming irreplaceable. So right now, Apple, it's almost like a no risk. Well, not no risk, but basically very little risk in terms of the Apple ecosystem, where all they're really doing is enabling people to do more. Now, yes, there's going to be some broken eggs along the way, and not every application that's quote unquote AI powered is going to be a hit. But that's one of the things that you do. You gotta wait on the developers to be the creative engine for the next generation. I mean, what do you think what's going to happen? You think this is the kind of phone that we have, and that's what we're going to live with for the rest of our lives? No, innovation works in these long-tailed cycles. And I think we're at the beginning of a new AI cycle. The only thing that I will say about this current AI hype cycle is that at some point, it's going to come crashing down, in which case it's going to eventually recover. And then you're going to have like a nice long tail of consistent growth. So very similar to the tech bubble of 2000, where you had all this hype around the internet and valuations got bid up on all these companies. I think we're going to see the same thing with AI, and I think we are seeing it with AI. Eventually, all of that stuff is going to correct, but that'll be a great opportunity to pick up great names that are on the cutting edge of innovation. And then, like I said, you'll ride another 10 years of growth. Very similar to buying Google in 2003, Facebook when it IPO'd in 2008, Amazon after it crashed in the dot-com bubble because it was still there, even Microsoft and Apple and all these other companies. So the key is we have to, as investors, one, we have to try to figure out when the crash in this AI hype cycle happens. That's number one. And then number two, who are going to be the survivors and end up being the long-tailed thriving companies that are going to see us get exponential returns for the next 15, 20 years, maybe even longer.
What do you think of Nvidia at all-time highs right now? I mean, it's up 12% this week alone, 115 for the year. Does it make sense to you or no?
It reminds me of something like Cisco in 2000, but there are other components to the Nvidia story that I can't necessarily address. I don't know when the top is going to be. Like, that's just calling a top is one of the most difficult things that you could do. But there are always going to be signs. Like, one of the signs that we are likely to see is that if there's any indication that there's going to be a cutback on forward demand, then it looks like it could be something that's toppy. But in terms of like forward growth, there's no slowdown that I'm seeing in Nvidia. So I'm not investing in Nvidia because I just don't think that there's enough of a return potential ahead in order to mitigate some of the downside risk. If we do get somewhat of a correction, let's say the AI hype cycle kind of dies down, the hyperscalers aren't making enough money to justify all the CapEx spend. All these things could play into a bear, I wouldn't call it bear, but a corrective thesis on Nvidia. And, like I said, right now, I just don't think that their juice is really worth the squeeze. There are other opportunities in the market that are being overlooked, primarily because everyone is concentrated in the mega cap 8, including Nvidia now, so that all these other little players at the bottom who are doing exceptionally well are being completely ignored. And I think that's where the real potential is.
Can you make sense of this GameStop thing that's happening right now? So just real quick, it's up 20%.
I have no clue, man.
No, but I'm trying to understand logically. Does it make sense if they get $1 billion on their balance sheet, even though they diluted you by 50 million shares? Does that make sense for it to kind of go up because they have more cash?
There were people buying JPEGs of monkeys for millions of dollars. That is how irrational markets work, man. People are stupid. That's just how it is. You can't make sense of it, but the one thing you can't do is, you could try to gamble. If you want to buy some calls just to gamble, go for it, but just don't make it a real investment thesis, hoping that this is something that's going to turn you into a.
I think it's dumb. I was just trying to think logically, are the frequency trading algorithms like, oh, GameStop has $1 billion more, therefore buy it? That's where I'm coming from on this, but it might just be people just buying it to buy it.
If they figure out how to pivot their business completely 360 and stave off automatic downloads from the game consoles, I don't know. This is one of those things that I don't know what the company can do with $1 billion other than just burn it slowly over time and just basically survive for the next 5 years. And every few years there's going to be a hype cycle. They just raise more capital from unsuspected. AMC did the same thing. Remember where they did the stupid ape tokens or something?
Yeah.
It's unethical in my opinion for the CEO of a company to basically, dilute the crap out of shareholders and keep the company. I don't know, whatever, bro. I'm not going to go into ethics right now.
Hershey's is down back below 200. Cacao prices are up. Is Hershey's a buy on this, or what do you think?
I think so. I think cacao prices will naturally come back down again to reality once the weather patterns in West Africa kind of materialize and production yields go up. So I think it's just a matter of time before we see cacao prices come down, in which case Hershey's is still doing really well financially. So, this is a really strong company that generates cash flow. They're not losing market share on a lot of their products, like some people are saying, oh, Mr. Beast is a threat and all this other stuff. This is a really, really, really big company. The one thing that a lot of people may or may not know is that they do have a growing salty snacks business, which is doing really well, and it's actually growing really, really fast. So if you guys have ever eaten Dots pretzels, which are amazing, by the way, I don't know if you've ever had Dots pretzels.
Do they have nuts? Because I love to eat nuts.
No, they don't have nuts. They also have Skinny Pop. I don't know if you tried Skinny Pop.
Oh, Skinny Pop. Yeah, that's like a cheap, not cheap, but low-calorie popcorn or whatever.
Yeah, that's actually growing pretty fast as well. So they have some brands that are doing exceptionally well. They are integrating a lot of new operating efficiencies into their business. They're upgrading a lot of their old technology stack. So it's an execution story. for Hershey's, in my opinion. Right now, the market is kind of just dinging them a little bit because of the high cacao prices. But I think overall, when you start to look at its earnings over a long period of time, this is an up and to the right business.
Yeah.
I think they're going to do just fine.
Okay, not bad. We got a long weekend. Anything you want to tell 748 people while you're live?
No, enjoy your Memorial Day. You know, spend time with your family. Take some time away from the market. Don't always look at the market. Don't always look for things. I mean, I'm taking some step backs because I have to do things on a personal level. But overall, this is a nice long weekend. Spend it with your family. That's the best investment you can make. Fuck call options. Fuck put options. Spend time with your family.
I love it. I love it. Thank you, Kris. Appreciate it. Talk later.
Later.
All right, folks. I think we ended off there. Nothing else too crazy happening after hours. We do have AMC and GameStop going crazy. It is insane, dude. The stock's up 15% after being diluted by 45 million shares. Wild, bro. Absolutely wild. But that's what we got for GameStop. Yeah, we'll be live with Palantir Weekly. So before you officially have your long weekend, Matt says, how come Amit never calls me? Matt, do I even have your number? Wait, no, I have your WhatsApp. Let's call Matt. Let's see if he picks up. So he always wants to talk shit in the chat. Let's see if he actually picks up. I'm going to call you on WhatsApp, Matt. Matt, we're going to get some of your thoughts on the market. If you call in, we'll end it on. Oh, wow.
What's up, Daddy?
Hello, Mr. Matt Money. You know your name in my phone is Matt Money. I'm showing everyone right now.
There it is.
It's Matt Money. Yeah, I didn't know I have access to your line as easily. I would love to have you as a contributor, you know, every week, every other week, whenever you have time to join the show. So let's ask you some questions, dude. We haven't heard from you in a while. I know you've been traveling a lot for work, been doing a bunch of different things. Market's at an all-time high. Your portfolio is probably up, you know, a couple $1 million this year or something. How are you thinking about the markets? You think it's a bubble? You think we're just getting started? What's going on?
Nah, man, you know me. I'm a 10-year kind of forecaster, right? I think what we're seeing is a renaissance of what the future could look like for business. You know, you think of things like Palantir, AI. You know, I think it's only the beginning. I think the thing that I recognize is a lot of people were probably feeling the same in 2012, 2013, like all these technology companies coming out with cloud and the new iPhone and things like that. And people were probably sitting there being like, the market probably can't go much higher than this. And here we are, you know, coming out with things like AI and moving things at such a much faster pace beyond anyone's recognition. And I think it's hard to take a step back and be like, holy shit, this is literally changing in front of our eyes. Just like Nvidia, you've been covering that for the past 2 days. And just recognizing how much capital spend. They've literally tripled or quadrupled their revenue on a quarterly basis in the matter of like 18 months.
Yeah.
And that's just something that's like unprecedented. So anyway, it's definitely something fun to watch, but I think that there's still so much value to be had. Palantir being one. You know, I'm a big fan of Rocket Lab. I think that over the weekend, they're going to do another launch here, which I think Vince and I are going to cover. But I think there's so many other companies out there that are still very much in their infancy. But I hear what Hot Kris is saying too. I caught just the tail end. You know, definitely have some family time. I was literally just thinking about the same. I kind of regret not going home for Memorial Day because we just bought the house.
Yeah.
And we're finishing up. My sister's getting that finished up for getting it on the market. Rental markets. We already got a few for like late July, early August, and then we got one for next July as well. So I was just like, damn. I was like, this thing's gonna get booked up, and I won't even be able to get to use it before I even put it on the market. So
okay, so a couple. I want to ask you about that and Rocket Lab, but let me give you a couple questions first. In terms of the big cap tech stocks, Google. So let's talk about that. Google starts showing like George Jefferson as an African American a couple months ago, and everyone freaks out that Gemini is out of control. It's woke, yada yada. I think stock bottoms at like 128, 129. You documented proof on your Seeking Alpha are saying, nope, this is a buy the dip. Google now at all-time highs. What do you think people get wrong about Google? And for someone trying to initiate a position at 176, how do you think they should think about the company?
I think it really just depends. I think a lot of people get caught up in headlines a lot of times. You need to look at the underlying machine that is Google. They still have so much brand value. They're still growing search, even though people are jabbing at them at every chance that they get. They have a cloud business that's growing at mid-20s%. YouTube TV and all those premium contents that they have are still growing at 20-odd% as well. So I think it's a monster to try to slow down. At the end of the day, those things can be fixed in a matter of weeks, and they were, right? And yep. I think sometimes you need to recognize, is this a real festering of the organization, or is this something that can be remediated? And to me, I was just like, okay, it's a small mistake, right? We're not blowing up the Capitol. At the end of the day, I think for folks that are truly trying to understand what's best for them, there's people out there that can invest in dividend stocks, long-term appreciation, what have you. I think they just need to look inward and say, what am I really trying to do here, right? What's my time horizon? What's my risk tolerance, et cetera? A lot of what I do is invest in really steady companies for like 70-80% of my capital. And then the other 20-30% I get speculative, right?
Do you think Google's a buy right here at 176? Let's say for 5 years out.
5 years out, absolutely.
You think their moat is that you think you're not worried about LLMs disrupting search or anything like that?
I think it'll complement Google's making their own LLMs. I think that whatever Google's products that come out with, just like how Instagram didn't always have ads, just like Twitter didn't always have ads. Now they're every fourth or fifth post. What's to say that it's not going to be the same for if you're using a Google AI product, that you're not going to get some sort of advertising? You're always going to be in some sort of prompt window that you'll be able to get advertising in. And this is the thing that always kind of like people are like, oh, I don't understand. It's like you could still, just because it's AI doesn't mean it can't be manipulated by advertisements and search revenue and things of the like.
Okay, let me ask you this question, Matt. So SpaceX is actually offering potentially a new round, or they're offering shares to the private markets at $200 billion. Actually, to let the chat know, I had someone reach out to me today who has an allocation, and he said, "Hey, do you want to get in on this?" Now, I don't have any free cash, so I can't get in on it. But it does seem real, given I had a contact reach out. It's not just a rumor; they're actually selling at $200 billion. So my question for you, Matt, would you buy 5,000 shares of Rocket Lab at $4 right now, or would you put that 20 grand into SpaceX at 200 billion, Rocket Lab at 2 billion market cap?
Well, it's hard, if you think about it in this perspective. The way that I like to look at it, taking a 5,000 foot view, 20,000 foot view, or even thinking about it from space, let's say, the market for space companies is literally.
I see what you did there. I see what you did there.
Literally the realm of possibilities right now, SpaceX being the leader, is 200 billion. So you literally have a space between 0 to 200 billion. Well, I guess my question is what are you more investing the money for? Are you investing it because you like Elon, or are you investing it because you want to make money? So to me, I see a path where Rocket Lab can not surpass SpaceX. I think SpaceX does a phenomenal job, right? So I'm not bashing SpaceX. They're a phenomenal company. They've obviously changed the way that space is being done from a private company perspective now over the past, say, 10 years, and have done a phenomenal job with that. Rocket Lab, though, being a $2 billion company, like if you think it's literally 1/100th the size, and here they are on the precipice of being profitable within the next 24 months, having $550 million on the balance sheet, continuing to shrink their not operating expenditures, but their negative cash flow, and actually getting to a place where they're going to start growing cash flow.
Why do you get so excited about this company at 2 billion? I mean, what is it that, and you did have the honor of interviewing Peter Beck, so you're really into this, the CEO of Rocket Lab. What about this thing gets your dick hard?
That's a good question, man. I mean, if you think about it, you can simplify it to this, right? Other than, say, Blue Origin, ULA, which is United Launch Alliance, which is a combination between two companies, and basically Rocket Lab within the United States, So simplifying it, there's all this other, chatter of Firefly, Astra, Relativity. Those guys have barely launched any vehicles. These guys have launched 50 times, right? Yeah. And so who else can say that they've launched 50 times other than SpaceX? And so if you look at it from a realm of that alone, then you'd say, damn, that's something to be thinking about. Now you have Astra, which is basically saying who knows when the next time they're going to launch. So they're out of business. They launched a couple rockets and some of which weren't successful. You have Firefly, who's putting themselves on the market. So who knows if that's actually going to go into, say, chopping up the company or if it's actually going to ever launch a rocket again. There's that to be said. Relativity is running out of cash as well. So they've launched one vehicle and they're not going to be launching the Relativity or the Terran 1 anymore. They're going to be looking for the Terran R, which is a medium launch vehicle. So, you look at it, that's this launch, right? So Rocket Lab is ahead by everybody by about 45 launches. The only one they're not ahead of is, say, SpaceX. So there's that. And then if you take another step back and you look, Rocket Lab's providing satellites, they're providing solar capability, they're providing operations for other companies as well. So even if, say, NASA goes into space with SpaceX, just like they had a Jupiter mission like probably 2-3 months ago, who's providing the solar panels for that satellite? It's Rocket Lab. And I don't think people fully recognize all of that. So I think what their goal is to try to do, to simplify it, I've chit-chattered why it's better than other companies, etc. Let me simplify it and say 2 to 3 sentences. Rocket Lab is trying to enable, and Peter Beck explained this very well on Vince's channel during our interview. So to go into the statement, Rocket Lab is trying to enable basically somebody approaching them with having zero capability to build a satellite to say, we want a satellite in space. Rocket Lab can then say, what do you need? They can build the satellite. They can put the satellite in the rocket. They can launch the rocket, and then they can operate the satellite. So you could literally, Emit, if you had the money, could go to Rocket Lab and say, hey, I need you to put this satellite into space. And they say, got it. And so it's like, what other company?
You think the TAM for satellite launches is only getting larger?
It is. Yeah. So I think in actuality, if you think about it, the reason why SpaceX launches so many rockets is because they're launching so many Starlinks. So if Rocket Lab had something of their own, which they're in the current term trying to find what is the best opportunity for them. They say they're not going to try to replicate Starlink, but they're going to try to find something that can generate revenue and they can launch on their own. That's what they're going to try to do. So I'm curious to see what they end up coming up with. But I mean, if you think about it, they grew revenue from 240 million last year to being on par for about 400 million this year. That's an 80% growth. It's pretty impressive. And I think next year they're aiming for close to like 600 million. So they're continuing to grow. And then if you get Neutron involved, if you think about it in that respect, the Neutron is their medium launch rocket. That's going to be $55 to $60 million a launch. And so if you think about it, they launch 2 or 3 of those a year. It's going to be pretty impressive.
Is the bear case that the launches fail? That's the biggest bear case?
Yeah. I mean, and that's possible. In worst case scenario, all that cash flow that you're seeing, the negative free cash flow, that's all spending for Neutron, right? And so if they stop that, I think if you looked in the inner workings of the company, the space systems business itself and the Electron business, which is their small launch vehicle, is actually profitable at this point. GAAP profitable. Their gross margins are 30-odd% on a non-GAAP basis, high 20s on a GAAP basis. So that's pretty admirable. So if you have enough revenue coming through the company, you'll actually be able to generate a profit. But I think the problem right now is that they're spending, $30 to $40 million a quarter trying to fund Neutron. And so once that's done over the next 6 quarters or so, I think it'll only be profitable from that point.
How many shares do you have? Like 15,000 or something?
Yeah, I bought a little bit more today. So I'm in between 15 to 20. I'm trying to get to 20.
Okay, so that 20,000, let's call it 80 grand, 85 grand. Do you think even if it's dead money over the next couple of years, when it explodes, the money will compound pretty aggressively once it's time for it to take off?
I think once Neutron starts getting a lot of contracts, it'll be pretty evident. So I'm thinking by the time year-end 25 rolls around or early 2026, I'm fairly confident this will be easily a $15 to $20 stock. The Seeking Alpha article that I wrote was predicting $15 by the end of 2025. So
interesting. Okay. Yeah. Real quick, are you going to be on the show today on Palantir Weekly?
Yeah, man, I don't have anything to do, and my power's on this week, so it was not. I was like living in a third world country last week, so now I'm actually back.
My power went out a couple days ago, and I was like, well, I might as well sleep. I have nothing else to do. Matt,
see, I mean, you don't think about it until your power goes out.
Yeah, you know? it's without the internet, it's tough. I want to ask you one more question, Matt, real quick, guys. His Twitter is in the chat right now. Please make sure to check him out on Twitter, and I'm putting his YouTube in the chat as well. So please make sure to give him a subscribe and check out. He's a lot of his theses on oil companies, but particularly Rocket Lab, much more fleshed out on the YouTube channel right here. Matt, so Palantir, we'll talk about this more on the weekly, but to give a preview, Palantir's been flat since earnings, actually down about 25% since earnings. I've been getting a lot of comments on what the hell's going on with Palantir, only stuck at $20, $21. We'll talk about it on the podcast, but philosophically, how would you tell an audience with concerns about Palantir at $21 to think about it as it's stuck at 21?
Well, I'm going to do a switcheroo here, Amit, because we got into it a little bit with you and Arnie it was 2 weeks ago, I guess. I didn't get to talk to you last week. Maybe you talked about it last week, so tell me if you did. You had never really used Palantir.
Yeah.
Up until that chance that you had that opportunity in DC, right? So we've always just talked about it, right? And you've heard me kind of explain on an abstract case, really for me using it for the past 5 to 6 years, what I've thought about it, how much I love it, why I think it's so much better, why I think it's literally the way I describe it. And the question for you is coming. Why I describe it as if Microsoft is redoing itself from the ground up, starting since 2016, and building it with all the previous knowledge of PCs and how the internet works and everything since then, and rebuilding all the software and tools that they created since then, incorporating all that knowledge. Did I undersell or did I describe it rather well, what exactly Palantir is trying to do? And how much more bullish or bearish are you based off of that once you've actually finally got to use the product?
Dude, after using it, I bought another 250 shares. I mean, like it really, and I got the privilege not only to use it and play with it. By the way, everyone can actually access the software. If you go to AIP Developer Palantir, just Google it. There's like this new website you can sign up and you get access to actually use some of the modules they have. But I got to talk to the employees and I got to ask them actual questions, and they got to like walk me through, showing me step-by-step stuff they were doing. And one of the best modules I saw was, ironically, oil and gas. And one of the ladies there was basically showing me all these different type commands you can do with AIP logic on top of the data sets that they were hypothetically working with in the oil and gas field. And then she was showing me the inner workings of why the ontology actually creates the productivity that everyone is dreaming about coming from AI. And so, and I knew this at a high level, right? You need the ontology to bring the AIP to life. The semantic capabilities of the data being classified actually gives it value, but seeing it in real time and then seeing the use cases of it and seeing all the different commands you can type into it to make it work, it just made me realize it's very difficult for an enterprise to not have this once they get used to it, which then brings up the bear case of can they sell? And like, that's always been, the bear case, but it's made me more bullish on the software.
I think the thing that makes me most excited is the interconnection of all the common data, the common language across all your different applications.
Yes.
So it's like, imagine the power of, let's just say, all your editing software being able to talk hand in hand with YouTube, or hand in hand with your Twitter, or hand in hand with. So right now, if you think about it at a high level, you're the person that has all the common language that's able to operate that. But if you have the computer having the ability to have all that common language, how much simpler and easier that makes that upon the user, to not have to, say, be the interpreter or the person that's manipulating it, because it's already being manipulated in the appropriate manner that you need it to be. So it's literally just being able to carry out actions as simple as you need it to be done. Right. And that's what I mean by kind of restarting the way that Microsoft should have been built starting in 2016, because they didn't have all these data problems and all this interconnected applications or need for interconnected applications when Excel wasn't even created yet. So now that you have all these like wavelengths of 40, 50 years, 60 years of computers, being able to build on all the knowledge that's previously been out there and say, hey, from day one, from a data analyst perspective, from a computer science perspective, how would I operate the oil and gas industry? Right. That's been around for 150, 200 years. How would I start the aviation industry from step one? If it wasn't done in 1908, what are we doing now to be able to do that? So anyway, I just think it's a great product.
You don't care about the stock.
A little bit surprised. How do I feel? I'm a little bit surprised, to be honest, that the uptake is not more. Yeah. And I'm still trying to grasp with, is it the fact that Palantir really just wants to get as many clients as possible, and they don't charge them as much, and they're hoping to build with them and create a stickiness within their organization. And then eventually, like we're kind of starting to see, the revenue growth will get back into the 20s and 30s? Or is it really stalled that much? Is it really a sales problem? And that's what I'm trying to that's where I've been the past 12 months or so. I'm just like, I'm not saying that I'm surprised that, you're not seeing all this AIP revenue come through, because I know you needed 18 months or so before you start really seeing that cohort of revenue really start to ramp up. But at the same time, the explosive growth of, say, 1,200% growth of U.S. commercial U.S. commercial customers, and the stock not being at, say, $3, $4, or $5 billion of revenue as of yet is confusing, because just based off of my conviction of what I've done at UDoc and how I think it's applicable for so many organizations, it's hard for me to understand why everybody's not trying to get their hands on this shit.
Right.
And based off of what your experience is, I'm surprised you're like, you say the same thing, right?
Maybe it is a sales problem, dude. Maybe it is.
Maybe it is.
Have you been buying it? When's the last time you bought?
It's a good question. I actually looked at that and I was really sad. So the last time I bought was like in the $7 or $8 range. And I think the reason being is I've sold some puts. I remember selling puts at 12 about a year ago. I sold some puts at 17 here. And they've just never retraced. Yeah. But at the same time, I'm still, there's a couple positions that I'm still trying to trim on my portfolios, like 40, 50 grand, that I'm just like, I'm not going to build this. I don't really need this anymore. And I'm thinking, like, how do I deploy that 40, 50? Do I want to put it all in the S&P? Do I want to put it in a Palantir? And honestly, at $20, I'm honestly thinking about adding a little bit more. And between you and me and the 650 people that are listening, the past 6 months on a personal level, from a work level, has been pretty good to me. So
made some money.
Fortunate in that respect. Yeah, I've been very fortunate, and I'm not talking about the stock market. I'm talking, my day-to-day job. So
bonuses, stuff like that.
Yeah, exactly. So I'm just like, I'm kind of playing on another tier of what I could be putting into the market. So I'm thinking, is the amount of money that I had in Palantir really that upsetting to me if I lost it all, or could I bump it up another 20-something% and be okay? Is it okay if I go to 5,000, 6,000 shares and still kind of hold? And to be fair, I think about it and I see other folks, and this is part of the FOMO piece, but I see other folks being like, yeah, I got 4,000, I got 5,000 shares. I'm like, damn, I got way more money than you. How come I don't have more? Like, I'm not, no hate on those guys, but I'm like, these guys are like full porting it over here. And I'm just like pussyfooting.
Well, I told you this a while ago. I was like, when it was 15, I remember you and me did it. I was like, dude, just get 10,000 shares, 150 grand. It's not a big deal for you. You're a big dog. But you spread it out across big tech, and that's done way better for you. You know.
Exactly. I mean, yeah. I mean, I can't complain. I put a lot of money into Amazon and Google in 2022, and that's done well. And I've put a lot of money into Rocket Lab, and that has yet to pay off. But I'm sure I'm only down like 15, 20% on a lot of those shares. I think my cost basis is in like the high fours. So I was kind of saying like, I've kind of took my foot off the gas on Palantir a little bit, and it's kind of sad. So maybe I should start selling some more at the money puts for, a couple hundred shares here and there, and slowly start to accumulate.
So when you get married, are you gonna let your wife know how much money you have in the stock market?
I don't think the proposals don't come in as frequent as you think.
No, but I'm just saying, eventually, when you wife somebody, or would you let her see your personal investments?
I don't know.
You're rolling with a decent amount. Maybe you don't want someone to know about how much you have.
Well, it didn't help. When I was in Trinidad, I would show people the portfolio, and it was probably about half the size, maybe a little bit less than it is now. And they just like didn't care. I thought it was pretty interesting. I was like, this is like US dollars and not Trinidad, dollars, right? Like, this is like, anyway, but,
it's interesting.
I mean,
I think it's an interesting question, because I was talking to a pretty rich guy the other day, and he was just like, I will never let my kids know, what they will never know how much money I have ever, and it's definitely is one of those things when you do have capital, when you've been lucky enough and you worked hard enough to afford yourself some capital. Yeah, it's kind of a, how much of it do you actually show to your loved ones? It's a question I think everyone has to think about.
Yeah, I think the things that I try to instill in my nieces and nephews is like how money actually works, and the lies that I was kind of taught. Because really you start to understand money as fuel, money as energy, rather than like, I think people try to like put it in a box and they get super scared about it. It's like, no, money is really only important when you use it to transact, right?
Yeah.
And otherwise it literally doesn't, and it has a little bit more value than it used to with interest rates being higher. Like you can actually make 4 or 5% with it just sitting there, but you really need to use it as a means to use it as energy, like purchasing an asset, purchasing a home, purchasing X, Y, and Z. So anyway, I think, but yes, I'm seeing June. The only person I would not get a prenup for is June, but other than her, everyone else needs a prenup.
I love it. Matt, thank you for being on. We'll see you on the weekly. I'm putting Matt's Twitter in the chat. You guys can check him out. And now that I know he's a contributor, he'll be on the channel plenty of times on the show.
Especially on Fridays, man. I work from home on Fridays.
Oh, perfect. I always need someone on Friday. I tried to get Steve, but he got busy. Okay, so perfect. You'll be in the loop on Fridays. Perfect.
You're the man.
All right. Thank you, Matt. Bye.
You're the man. Later.
All right, guys, we are done for the day. I hope you had a good one. Hope you had a good week. I'll be live Palantir Weekly tonight. Still got some more work to do before the week is done for me. And no streams on Saturday, but tomorrow we'll have what's his name, Howard Linzone, the StockTwits founder, on the channel live. Now, I did just post a podcast with Kat Orman, who is the founder of Flyby Robotics. She's using Palantir software to build her company. Really interesting stuff. That's in the description. Definitely check it out. The comments are going crazy on that one. I'm sure you guys are having fun. No, she's not my girlfriend. Everyone was like, oh, you had googly eyes in the video. Dude, I'm smiling. And I'm not allowed to smile in the podcast. Like, goodness gracious. It was just... Anyway, check out the pod. I think it was super awesome. Kat is super dope. And you never know, she might be building the next billion-dollar startup on top of Palantir software, which is super, super exciting. And I hope you guys enjoyed that as well. All right. That's it for me. Matt Money just bought 500 more Palantir. There we go. 500 more Palantir. I love it. Thank you all for being here. I appreciate it. Hope you guys enjoyed the week, enjoyed the show. And, there was another funny comment on the market open. Someone said, why do you have to talk that fast? And I clipped it and I put it on Twitter and I was like, because time is money. I thought that was good. And then someone commented underneath that. They said, oh, he's talking so fast because he has tight eyebrows. And I was like, are my eyebrows that tight? Is that really I don't know, but there we go. That's what we're doing. Thank you guys. Hope you guys enjoyed it. We'll see you on Palantir Weekly. If not, I'll see you Tuesday morning, 8:45 a.m. for the market open, and we'll keep going from there. Bye, everyone. Have a good one. Good night.